If I was to teach you one concept that changed my trading completely, it would be internal range liquidity to external range liquidity. And if you don't know what that is, then I highly suggest you stick around for this video, get a notepad, because trust me, this is going to change exactly how you see the markets. So let's jump straight into it. Internal to external range liquidity. Internal range liquidity basically refers to liquidity inside a defined range. So that could be between the high and the low of a previous day, session or weekly candle. It's built up of equal highs and lows, for example, where liquidity is resting, swing points, or consolidations where traders place their stops. And it acts, this is probably the most important part of it, it acts as the fuel inside the box, and the market often sweeps these levels before seeking a larger move. This, in a bullish market, is what internal range liquidity looks like. Okay, you've got a range which is a low and a high, and you're looking for the internal range liquidity to be swept before continuing to the upside. All right, that is internal range liquidity. External range liquidity is the liquidity outside the defined range. So this is the liquidity that's sitting above it or below it, whichever basically. It's usually the bigger target for price once an internal liquidity has been cleared, and it's essentially just a continuation of where price is going to go. So let's say, for example, obviously you understand market structure right now, you understand high highs and high lows. We make a high, low, high. A lot of people might see this as a break of structure, but because we understand internal to external range liquidity, and we know that we need to grab some fuel in order to move higher, this is going to be where we will position our entries, look for lower time frame confirmation, and then continue the trend to the upside, okay? So how do we use this? The market will often move in a two-stage process. Sweep internal liquidity, trap traders inside the range, for example, and expand to external range liquidity, all right, which is the real destination of price, just basically where price is going to continue to. We need to take some liquidity in order to continue the run, and that's where it is. So look for internal range liquidity, pair that up with a key level and lower time frame confirmation, and enter. I know it sounds simple, but it is as simple as that. Once you start to see this in the chart day in, day out, it's going to change the way that you see structure. Like it, pair that up with a session time, open, low, high, close, whatever concept you like out of the 9459 FX strategy. This changed everything for me. So I'll give you a quick example just up here, but like it's got to be in a trending market. So it might be, for example, making lower highs and lower lows, and this might be your internal liquidity in here. All right. So your key level in this instance, where it's sweeping some liquidity, might be this 4-hour or daily FVG. And this is what it actually looks like, okay? It might be like Asia's consolidating, London consolidates, New York sweeps the liquidity here above, taking the internal range liquidity, which is the red line, okay, in this green box. This is the internal range. And the external range is just the low here, which is where it continues to, okay? So you're continuing the momentum. This is why it's so important, all right? So let's say, for example, you're just looking at an imbalance area like this here. What you need to look for is some internal liquidity to be swept. So in this 4-hour level, for example, there must be some early liquidity here, such as this red X. All right, it swept it, broke structure to the downside, and then we enter towards the external range liquidity. All right, maybe that sounds a little bit complicated if you're new, but I'm going to explain it on a real life chart. So let's take the euro. Okay, this is for the last like few months. This is what I've been looking at the euro, and this is why I've been able to get more funding, get payouts, and just off this alone. Okay, so right here, I've identified that I'm in an expansive bullish market. Okay, just from this. It doesn't matter how I got there. All right, that's for another day. Okay, but I've identified that we could be bullish. We could be. All right, I can't tell you I'm guaranteed, but we could be. So what I'm looking for is internal range liquidity. So I've marked up my internal, which is this low here on the daily time frame, right? And my external range liquidity is going to be here. Okay, so once we sweep here, I drop down to a lower time frame, go to my entry model, and then buy. I'm buying up till here. All right, so you now have, on the daily time frame alone, this was on Thursday, so you got 1, 2, 3, 4, 5 days of buying up to this. That's 5 opportunities of the 5 days of opportunities that you've got to buy up to your next liquidity point. So we're bullish, right? So let's continue and see how does internal range liquidity and external range liquidity work. And pairing that up with high highs and high lows, we should start to understand that if this is the internal, if we've taken the internal, right, then this should be our low, our high, maybe this is a high low, all right? Here, we've swept some internal, but it's not the best. So let's just find the best examples that I can find right now, okay? Let's take that off. So, what do we have here? We have a low, all right? Whether you want to call this the low or this low, but I'd always choose the biggest swing point, all right? We've got the high here. Where is our internal range liquidity here? Where is it? We've got a low, we've got a high. Where is the internal range liquidity? Well, we've got some equal lows here. You can see these, just here, all right? These lows. Swept into an imbalance, it's taken, and we move higher, all right? And then what do we have again? Okay, this is where, and this is a live market example, right? There is a lot of people, okay, a lot of people who were very bearish, very bearish at the end of last month, very bearish. They were like, oh, it's made a lower high potentially, we've broken structure, but we know we've not broken structure. We know that, okay? Why? Why is that? Well, we've got a low, okay, remember this, all right? You've got to identify the range. It's the low that's made the high, okay, the expansive move. So here, got a low, we've got a high, low. We've topped out here at a high. So where's the internal liquidity? The internal liquidity is here and here. So now I'm looking at, I was buying here, I actually took a loss here, right? I was expecting this to maybe go and then go higher. But this was my second point of interest here. Boom. And then once we've moved higher, I'm now looking again for internal range liquidity to be swept, all right? This to move higher. So for next week, I'm actually expecting something like this. Because where is my external range liquidity? My external range liquidity is just up here. Once we hit that, I don't know what price is going to do, but I am going to be buying aggressively all the way up till there. All right, and that's how I've got my trade plan. Internal range liquidity to external range liquidity. You don't have to wait necessarily for these, these massive points in price to like come down to, but on the daily time frame, it's really clear. And on the lower time frame as well, you can actually find that price also does the same thing, right? You can also find it. So this, for example, let's say it's bearish. You might have seen this sweep internal liquidity. You've got a let me find a little bit of a better example here. But let's say that you're bearish here, right? Say that you're bearish. You're then looking at price making a high, low, high, low, high, low, sweeping some internal liquidity to then continue down here to the external liquidity. Not the best example of that, but I like to stick to the higher time frame. And the more you start seeing it, the more it will make sense to you. But I like to use daily and 4-hour structure for that. Now, a really good example for this is actually Bitcoin. Okay, Bitcoin is a great example of internal to external range liquidity. And let's even just go on the weekly, just to kind of like make it really clear and how we've been making money from crypto for a little while now. So this repeats itself over and over again. You can literally take this as a strategy strictly for Bitcoin, and I promise you're going to make some really good moves, okay? Can't promise you'll make money because I can't say that on YouTube. But down here, what have we got? All right, we've got a range. We've got a low, we've got a high. We sweep the internal liquidity and move higher. So now what we're doing, we're waiting for price to chill out. Then we're looking for internal liquidity. That's probably the only one. Obviously, you've got this as well, I'd say, or this, right? What do? We consolidate, take internal liquidity. Where's the external? The external is here, all right? So what do? Expand, create some liquidity, take the liquidity, and continue higher. Then what do? We have it here again. Expand, consolidate, create some liquidity, take the liquidity, head towards the external liquidity. Boom. And what do we have here as well? Expand, creates liquidity, takes liquidity, expands towards the external liquidity. And then what am I expecting here? I'm expecting the exact same thing. Expansion creates liquidity, takes liquidity, and expands to the upside. Okay, I'm just going to zoom out for you so you can see it a little bit better. But this is how a market moves in a bullish trend, all right, in a nice expansive bullish trend. We expand, consolidate, manipulate, expand. Consolidate, manipulate, expand. Consolidate, manipulate, expand. Consolidate, and until it's bearish, it's bullish. All right, you've got to stick with. A lot of people just change their biases here, man. Like they change their. People are like, oh, a Bitcoin's going to shit the bed, but no, it's not. It's just coming down to mitigate price, coming down to mitigate maybe 50% of the range, look perfectly, take out some internal liquidity, and then move higher. The same way here. It pushes up, everyone goes, oh my God, it's taken out all-time highs, it's going to start dumping, it's going to reverse back to 20K. No, it's just coming down to mitigate price, take some liquidity, and move higher. All right, you'll see in all of the weekly forecasts for the last year, not to blow my own trumpet, but they've been spot on. And the reason why is because we understand market structure really, really well. We keep it simple, we understand our key levels, and we understand internal to external range liquidity. Trading is very hard when you don't understand the trend. When price is moving like this and we're trapped in this, when you zoom into this, right, this is on the weekly time frame. When you're looking at this, that's a very hard market to trade. That is an extremely hard market to trade, in fact. I can't tell you if we're bullish, bearish, or whatever, but when you understand that this is just internal liquidity and you wait to see that manipulation, it starts to become clearer. But I'll be honest, I'm a victim to it as well, right? I'm a victim to it as well. I'll look at this once we are, for example, let's say here, right? And I'll be looking at this and going, oh, okay, consolidating, but maybe we could buy, I could maybe catch a buy here. You know, I might be buying here, and then maybe price moves, I buy here, I'm buying here. But really, if I had the patience, which obviously I say when I had, prior to this I didn't, is I would just be buying, and then I'd know about the concept internal to external, but I wouldn't apply it as well. And the more I started to understand, I started going, oh, we've just swept liquidity here in a key level and closed back inside the range. Bro, I am buying from that candle. All I'm doing is buying. Sorry, my internet's being a bit poor, but all I'm now doing is buying. I don't care if I lose. Cool, might have taken a little loss there, but I know that this is my area. Internal to external range liquidity, obviously this I'm not on the lower time frames to kind of like get a confirmation, but here I'm going, I'm confident in my bias. We're still bullish, we're mitigating a key level, taking internal liquidity. This is where my target is. And this is how you have trade plans. This is how you will formulate a trade plan. It's how you'll know where is my target, where do I want to get out, and also how you can swing trade as well. So yeah, that, guys, is internal to external range liquidity in a nutshell. If you've seen my weekly forecast, if you're in the Discord group or the Telegram group, or you're one of my one-to-one students, you'll understand the power of this concept. I'm not just good at guessing the markets. Like, I didn't get all those fundeds that I showed you this year. This wasn't luck, or this wasn't just like I have this talent for trading. No, this is just understanding this concept really, really well, understanding what key levels are being respected or disrespected, and then continuing price in that direction. All right, pair that up with what you've learned about, power of three, about breaker structures on the lower time frames, your session times like open, low, high, close, whatever, and that is it. That's you. That is your trading plan. You don't really need much else than that to trade. Okay, obviously you've got trade management and your psychology. I won't get into that right now, but yeah, that's basically it. So yeah, drop a comment and please leave a like. If you're not subscribed, there's about 50% of the people watching this video aren't subscribed, so please make sure you hit that subscribe button. And if you found this insightful and you want more videos like this, please let me know in the comments below, and I look forward to seeing you on your trading journey. So yeah, follow me on the Rapper Trader Instagram as well, and yeah, look forward to catching up with you in a bit. But peace and love, and trade safe. Bye bye.